So, imagine I walk up to you tomorrow and say, "Hey, I have an amazing investment opportunity for you. There's no company, no product, no revenue, no physical asset, no regulation, no guarantee, and frankly, there's absolutely no reason this thing should have value. But here's the kicker. If enough people buy in after you, you make money. Congratulations, you've just understood 95% of the cryptocurrency industry." Now, before crypto Twitter starts typing aggressively with their laser eye profile pictures, let me be clear. I'm not saying every crypto project is an intentional rug pull. I'm saying crypto has created the most absurd financial system in modern history, a place where completely useless things are worth billions, where obvious scams make people rich, and where everyone knows how ridiculous it is, but nobody cares because numbers go up. Is this the future of finance? Or did humanity accidentally build the world's largest casino and call it innovation? Welcome to the scam that keeps giving. To be fair, it didn't start as a scam. Back in 2009, after the banks blew up the world economy and governments started printing money like they discovered an infinite ink glitch, Satoshi Nakamoto dropped a white paper. The idea was revolutionary. A peer-to-peer electronic cash system. Money without banks. Money without governments. A digital middle finger to the traditional financial system. But fast forward 16 years, and the reality looks less like a digital utopia and more like a guy who calls himself an entrepreneur, but is actually just selling solar panels door to door. Bitcoin isn't just another crypto project. It's the bottom block in a very tall, very unstable game of Jenga. The entire industry's value is built on three narratives: that it's digital gold, the future of money, and a hedge against inflation. But when you actually stop looking at the memes and start looking at the data, you see a pattern where the story changes every time the technology fails to deliver. Economists define money using three criteria: a medium of exchange, a store of value, and a unit of account. Bitcoin fails all of them. Hard. First, medium of exchange. People say it's the future of payments. Right. Bitcoin processes about 500,000 transactions a day. Visa does 65,000 every second. Bitcoin's entire daily volume could be cleared by Visa in under 8 seconds. Plus, a single Bitcoin transaction uses the same amount of electricity as an average American household uses in 43 days. Using Bitcoin to buy coffee isn't innovative. It's like trying to mow your lawn with nail clippers. Second, store of value. You need stability for this. Bitcoin has an annual volatility of 60%, 4 times higher than the stock market. It can swing 20% in a month. That's why real money managers call it rat poison squared or a pet rock. Oh, and decentralized? Please, roughly 2% of addresses control 95% of the supply. When ownership is that top-heavy, price manipulation isn't just possible. It's the business model. Third, unit of account. Even businesses that accept Bitcoin don't price things in it. They price in dollars and convert it instantly because nobody wants to sell a sandwich for 0.00001 BTC only for that BTC to be worth half a sandwich by lunchtime. But it's early, the bros shout. Is it? We already ran the experiment. In 2021, El Salvador made Bitcoin legal tender. They gave everyone a $30 bribe to download the state wallet. This was Bitcoin's magnum opus moment. The result? A massive failure. Despite the hype, less than 2% of remittances, the one thing Bitcoin was supposed to be perfect for, were sent via Bitcoin. 60% of people just cashed out the $30 and never opened the app again. Today, 66% of the population considers it a failed project. If the currency doesn't work, what's left? The infrastructure. But the exchanges are even worse. Take FTX. Sam Bankman-Fried was the white knight of crypto, the next Warren Buffett. Turns out he was just taking customer deposits and using them to play high-stakes parlay bets through his hedge fund. It was a complete failure of corporate controls, Enron on the blockchain. But the real final boss of crypto scams is Tether. Tether is a stablecoin pegged to the dollar, and it accounts for 70% of Bitcoin's trading volume. The problem? They've lied about their reserves for years. They claim they have cash, but it's mostly commercial paper, basically IOUs from God knows who. Tether has become the central bank of crypto, printing billions of tokens out of thin air to buy Bitcoin and keep the price from crashing. If faith in Tether slips, the entire market doesn't just dip, it evaporates. And then we have Michael Saylor and MicroStrategy. This used to be a dying software company until Saylor realized he could turn it into a leveraged bet on Bitcoin. He's now convinced Wall Street to pay a 100% premium for his stock. Think about that. Investors are paying $2 for every $1 of Bitcoin MicroStrategy owns. It's the financial equivalent of texting your ex at 2 a.m. You know it's a bad idea, but everyone's still doing it. If Bitcoin's price drops significantly, MicroStrategy might not be able to pay back the billions in debt they took out to buy it. It's a leveraged time bomb. So why does the price keep going up? Meet Dave. Dave's been trading for 2 years, thinks he's a genius because his portfolio is up in a bull market, and his risk management is prayer. The entire industry relies on the greater fool theory. You buy a fart coin or a JPEG of a pixelated animal, not because it has value, but because you're betting a bigger idiot will buy it from you later for more money. The narratives, the digital gold, the hedge are just marketing to lure in new fools. The moment new buyers stop entering, the machine breaks. It's a people's Ponzi, targeting retail investors with $2 minimums on Coinbase while the insiders dump their bags. At the end of the day, money is weird, but humans are weirder. We've spent 15 years assigning trillions of dollars of value to invisible digital code secured by mathematics and hope. Bitcoin might stay around. It might even go up more. But don't call it an investment. It's a digital mirage that disappears the second you reach for it. It's an industry built on greed in a new costume. If you enjoyed this financial existential crisis, subscribe, because apparently, understanding money now requires emotional resilience and a high tolerance for nonsense.